Welcome back, I'm Darren McDermott. Well, banking regulations, that has been a big topic of discussion here at the Dukascopi TV studio. And I have Allan Maksymec from Strategic Asset Management. Welcome today.
Thank you.
So, banking regulations taking place across the globe, having a huge impact now here in Switzerland. So which regulations are having the biggest impact?
Well, in 2014, probably the biggest impact will be with FATCA. It's a U.S. regulation. It's a new law that came into effect, will come into effect in July 2014. It will involve a withholding tax of about 30%, and it's quite wide-ranging. It will affect all U.S. source income. There will be many accounts that will be affected by it. And it's not just Switzerland, it's actually all banking centers. Dubai, Singapore, Hong Kong will all be affected by this law. In Switzerland's case, actually, they've been quite proactive. So a lot of the banks have prepared for this.
So speaking of being proactive, speaking about preparations, tell us more about the exact preparations.
Well, a lot of banks have been segmenting their clients. So they've been sorting out who's would be considered U.S. and not U.S. In some cases, the banks have chosen to specialize in certain markets. So they've asked some of their account holders to close their bank accounts. This is quite disruptive. Often the bank holders are shocked, actually, that this is happening to them because they've had good relations with the bank. And it's nothing that they've done, but it's just in general the banks are making these global decisions.
And what exactly does that mean for many banks and financial advisors located here?
So in Switzerland, I think what you're going to see is banks and advisors becoming more specialized in certain geographies. In our case, for example, we've taken the steps to be licensed to deal with Americans, to deal with Canadians. It's not simple, it's more complex, but in the end, it's worth it.
And what kind of changes will we see as a result of all these new regulations?
Well, I think what you're going to see is increasing complexity. There's going to be more financial data shared with multiple countries than probably ever before. And people will have to be more aware of their obligations. Basically, they'll have to do more tax reporting. The banks will also have to provide better statements to be able to allow the clients to do these reportings. And that will mean increased IT. So a lot of the banks are spending a lot of money on new systems to prepare for these regulations.
And in Switzerland, particularly in Geneva, we see a huge international community. So what will this mean for people who are globally mobile?
Well, I think, again, it's going to become more complex. Your taxes won't be as simple as they were in the past. You may require an advisor to help you sort out what exactly you need to do. You may have to change if you have a structure such as a trust or a company. You may have to change some aspects of that. So I think in a lot of cases people will have to be seeking expert advice where in the past it was much simpler.
So Allan, before we actually wrap up, is there anything else you would like to say?
Well, I guess just the general message here is that banks and financial intermediaries are being asked to police more tax obligations than they ever have in the past. And this is a trend that has, been around for probably a decade, but now it's really coming to fruition. And so people will actually notice the difference going forward. Probably in the next year or two, it's really going to change with a lot of the banks.
Allan, thank you very much.
Thank you.
And thank you for watching Dukascopi TV. We have plenty more coming up on the show today, and Lajafi will be in the studio, so stay tuned.